Hi there, in this video I'll be looking at the reasons I bought TruFin. Okay, TRU is ticker, but first an important message about doing your own research. The content of this video does not constitute investment advice. Do your own research. If you do invest in anything mentioned in this video without doing your own research and the share price goes down, you only have yourself to blame. However, if the share price goes up and you want to give me some credit, I'm happy with that. TruFin. It's called TruFinance, or what's that short for? It's a PLC holding company for a group of fast-growing fintech and gaming companies. This is not an investment company, which I'm a fan of. This company holds 4 companies, 100% stake in 3 of them, 51% in the other one. Normally, investment companies hold a lot less than that. So it combines the focus of specialization with scale achievable through partnerships and with incumbent players. So I want to bring attention to this trading update on the 19th of January. This is very telling here. Trading and company update. Revenues for the 12 months ended 31st December are expected to be significantly ahead. I love that one when you get an update of that. Of market expectations at approximately 14.6 million. Always put that phrase in your head. If you see that, it's always very good. Representing a year-on-year growth in excess of 100%. It's all about the growth, small cap companies. It's all about growth like that. You know, triple-digit percentage growth. This has predominantly been driven by strong performance from the console division of PlayStack, one of the companies, I'll go into that in a bit, very exciting, which despite further national lockdowns has been supported by robust performance across the rest of the group. So let's look at the size first. As you know, smaller companies tend to move faster, but they've also got to be sustainable, the rise, and scalable. Okay, no point going for pop and drops. You don't want to be a trader, you want to be an investor of long-term companies and generate multiples of the value. 75% of companies' biggest rises in the last 10 years start off with a market cap below 30 million, 95% below 100 million. So TruFin there, they've got 54 million market cap, they've got 4 businesses and a big chunk of cash. I'll go into that in a bit. So chart. Now the chart, I'm not that impressed with. It's if I move my head here. It's up at the RSI above 70, which is overbought pretty much. I never like companies to be that there. I like companies to be the RSI relative strength index, which is a measure of momentum. Just start to cook a little. Going from 60 to 50, 50, 60, I mean, in that direction. So this would be an ideal area. Coming from an oversold position. So in fact, coming from oversold, then here, you'd be buying. This would be ideal with 30 pence to double that. I'm a bit late to the game, not really though, considering the upside. But here, ideal, I bought on here. Who wouldn't have, eh? In the March sell-off, dash for cash in 2020. But up here, but I'm not fully exposed. I've got probably half the holding I want, and there's a reason for that, and I'll show you later. There's more opportunity here. We could have some selling going on, but I'll tell you that later. With this selling, there's an opportunity. Remember that, okay? Okay, so chart. I'm going to mark that as a no for yet. Commercial. The trend is your friend. Is the sector hot? The sector hot in the long-term uptrend. Is the end of the market big, commercial, and growing? It's very important. If it's hot, but it's all hype, and there's no commerciality at the end of it, you're not going to monetize this. So it's got to be commercial. And I'll just go through. So there's 4 parts of the business. There's PlayStack, games developers, big gaming market, of course. Oxygen, this is government bodies, 95 billion of annual spend, so it's very big, the market player here. Stargo, accounts invoicing market for small companies, very big, 58 billion. And financial advisors, 470 billion market. I'm not going to touch on that too much. Like I said, 100% holding all these, apart from Virtus. Virtus is that, Stargo is 100%. Very exciting story here as well, and very impressive story here as well, but I'll go through them all. So, first one, PlayStack, probably the most exciting. Provides publishing and financing services to the mobile game and console sector. Of course, gaming's very hot, mobile's very hot. They've got a fund here, award-winning game fund, development fund for gamers, a publishing reinvented fund, Ignite, they've got Snatch. These are some of the games they've done. And if you look at Doctor Who, Mortal Shell, a lot of these mobile games are quite big. This, though, is very impressive today. This is the thing that's really kicked up the revenue, the growth, okay? It was named in the Games Award the best debut game, the best debut game created by a new independent studio, Mortal Shell. They've signed a deal with one of these guys. Well, I think it's Epic, who is the biggest gamer at them. Epic own Fortnite. My kid's obsessed with Fortnite, right? So they've done a deal with recent revenue upgrade, predominantly due to PlayStack, powered by Mortal Shell. PlayStack has surpassed revenue forecast for 2020, won 2 significant contracts with major technology platforms. PlayStack's investment beginning to bear fruit. This is big. This is very big news. You signed with Epic. Your game has to have potential. So they're on the Stadia, of course, and Xbox by the looks of it, PlayStation there. If you do a search for Mortal Shell on YouTube, these are the views. 743,000, 1.8 million, 1.1 million. Big searches. This game didn't exist. I mean, for legacy games that have quite a few titles, like 1, 2, and 3, then that's quite big. But this is very big for a new game. Very big. And if you look at the average searches for it, close to 750,000 views on the game there. That's the average in the last year. The release date is planned on Steam. It's going to make it big again, Community Hub, for 2021. I think it's in when was this? It's PlayStation there. I think it's in a couple of months. No, I did have the time. Wow, I think it's in a couple of months. Not long. It's going to be on Steam. I'm sure it was on this page. This is a big deal. There's a lot of players on Steam. There's also talk about Mortal Shell 2, and this will really kick up the revenue, because when you've got a brand new game, of course, there isn't a fan base there. But this has really taken off. People are loving it, and it's worth doing a search on it. It's quite dark. It's a fighter game there. But when you go for a second title or third, you've already got an installed fan base now. Okay, there were millions of people playing it, or hundreds of thousands. So your marketing will work a lot better, of course. And Mortal Shell 2 will be a longer game, more intricate and harder. So it's just building from here. The hardest bit in a game is to get a hit. Once you've got a hit, to build on that, it's not as hard, because you've already got a fan base. So if Mortal Shell 2 happens, it's going to be very big. They've also got this happening. Bidstack, pretty much. Bidstack's a 30 million market cap, right? Bidstack haven't got the revenue that PlayStack has got. PlayStack was double digits, millions of revenue, growing very quickly. They're also now going to be doing in-game advertising, pretty much. So brand one, brand two, the Interact platform integrates a brand into a game, resulting in non-intrusive marketing. And so that's on top of the revenue they've already got. And that's basically what Bidstack has, And yet this company is valued at what? Well, it's hard to say. Around about 10, 12, 15 million, that's it. It's valued at revenue, which is nuts. Absolutely nuts. What have we got? 8, 9 times, 7 times the revenue of Bidstack. Plus it's got games and publishing. They've actually got games generating revenue. And this is an add-on, the actual in-game advertising. So I'm just using that as a comparison. Next company, Stargo, financial service solutions provider, working with the capital with finance technology solutions to small and medium enterprises, right? This is a big area here. They finance your business and manage cash flow in one platform. This is their website. They're excellent on Trustpilot. So number of unpaid invoices by days overdue. I mean, when you're a small business, you literally have to get your invoices paid. If you don't get cash flow, it kills the company. You've got a business. It's so important. So they can automate this. And, when you're sort of a small business with just a couple of employees, you can't keep chasing up invoices all the time. You've got to run the business. So this automates it for you. And look at the results here. It's phenomenal. These are unpaid invoices, okay? These are numbers of unpaid invoices. Now, the green is if you got with Satago. Look at that. So after 15 days, pretty much, less than 10,000 unpaid invoices, more than double that if you haven't got Satago software with that. And then 78% reduction in unpaid invoices over a month after being due. And this is the growth in revenue. Just look at that, the last year alone. But this is not it. This is the exciting bit. That growth is organic completely. And that's without this deal. On the 11th of December, Satago Financial Solutions announced a commercial pilot with Lloyds Bank, biggest bank in the UK. This commercial pilot is anticipated to run for up to 6 months, and if successful, this is the pilot, the trial, expect to lead to a 5-year commercial agreement. And it says here, this is expected to have materially positive impact on the financial expectations of Satago and the company as a result. So this is a massive deal. I mean, Lloyds Bank, if you look at the comments here, right, it's a trial, we know that. But Ben Stevenson, MD and Head of Invoice Finance at Lloyds, Doesn't sound like it's a trial. He sounds like he's fully into it. He's really going for it. I'm delighted to partner with Satago in order to rapidly launch a best-in-class digital working capital solutions for our clients. The proposition will help deliver critical funding and digital tools to small businesses in the UK and help them navigate the challenging external environment. That sounds, yes, a trial, but it's already integrated. It's working. We're doing it. It sounds like it's going to go ahead. We don't know yet. The trial hasn't been announced. When is it going to be? So 6 months. Within 6 months is 11th of December. So what's that? January, February, March, June. We'll know whether the Lloyd's thing is going ahead. That will have significant material impact on the uplift of revenue. Okay, and like I said, with Mortal Shell and PlaySlack as well. Within a few months, you'll know if Mortal Shell 2 is going to happen. That's another big news story. Okay, so you've got Lloyd's here, big bank, and look at Lloyd's. This is Britain's banks by market share. Look at Lloyd's. It's something like 20. It was a quarter of the market. Lloyd's market capitalization, 26 billion, 30 million customers, 65,000 employees. So of those customers, I don't know how many businesses, but you can see the massive uplift this could have on Satago. Oxygen, another impressive part of the company, 100% owned again. All these last three companies are 100% owned by TruFin. It's a leading provider. Can you believe the value of TruFin with all these companies involved? It's nuts. A leading provider of early payment systems to the public and private sector, both in the UK and internationally. So it's a huge market. Like I said, all the government spends, basically, if you pay an invoice early, there's benefits to that. And this software, Oxygen, takes a cut of that. So invoicing early and all that stuff. But they are the market leader. They have 35 local governments. And they are market leading. And of course, with councils and all that stuff, they very much work hand in hand with each other. Who are you using? What am I using? And they'll meet up and talk about it. It's won awards, Oxygen. So I think they're going to gain more traction and they're going to increase this market lead. 20% share of local government market. 20 million invoice discounts achieved to date. 1 trillion spend. It's very scalable. 22 billion spend Oxford's client base. There's 3,000 onboarded suppliers. So it's very sticky. Once you put the software in, you've got all these suppliers using it. To rip that out and put someone else's software in, something can happen. 5-year contracts, recurring revenue, which I love. You've got a value recurring revenue a lot higher than just normal revenue because it's coming back 94% client retention, 90% contracted recurring revenue. That's big. That's good. That's very positive. Look at this trade update. Oxygen continue to make considerable progress. Second half of 2020 saw strong growth in suppliers signing up to Oxygen's early payment programs. This combined with cost control resulted in EBITDA profitability in Q2, Q3, Q4 of 2020. So that is now pretty much making cash. This is positive momentum, highlights Oxygen's dominance in the niche market. It's only going to get better. It was held back a little bit with COVID, I think, but now it's going to get bigger, faster, and better. Virtus, this is the boring one, but still doing very well. We're here to enable ownership succession between independently minded financial advice firms. We make it possible for owners to sell their businesses to like-minded firms in a way that puts their clients first and provides them with a fair value for their business. All I'm going to say on this is that the loan book of Virtus Capital continues to perform exceptionally well. This is a trading update with no credit losses incurred to date and a growing pipeline. Virtus is on track to reach loan book target of 16 million during Q1 of 21 as a result, turn profitable on a monthly basis during 2021. So it's going to be profitable as well, hot, yes, very hot segments. Oh, I haven't put a cross in there, but there's a cross there. Let's go to earnings. So they say here, last year they did lose more than 8.4 million, but now they think they're headed towards profitability. That was the last year of loss due to PlayStack and all that stuff and other parts of the business. They're all sort of hitting inflection point right now, starting to generate positive cash flow, which is very good. And they said the group is fully funded to achieve profitability, which is nice to know. Directors is James. I've chatted to James, lovely guy. And he's from banking, 16 years investment banking, led alternative finance team at Arrowgrass Capital Partners. We're talking about Arrowgrass. He was there till 2017. James began his career at Merrill Lynch, big names, formerly partner at SAC Capital Advisors. So I'm looking here, basically, the track record, they have skin in the game, are the shares tightly held? So you got to look at those three things, all right? So here, for example, James has not a huge amount of shares, 165,000. But he has got part of this 1.18 in this the Employment Benefit Trust. He's got part of that 1.1. He's also got 4.8 million of options with an excise price of 70 pence and at various strike rates, with the highest being £2.10. So he's obviously incentivised to want to take up those options, strike those options there. Now, listen to this, very important. Hourglass Capital Partners, who actually James used to work for until 2017, they held 74% of the company. That's a huge chunk of a company to own. This was on the 31st of December. And then this happened. Hedge fund Hourglass to shutter after a wave of redemptions. So just shutting the fund down. So, they blame central bank policies around the world, firm led by ex-Dutch bank traders, wants to manage 6.4 billion. So they're shutting that down. Okay? And on the 5th of February, they announced their secondary placing. So Hourglass announced it successfully sold 53.83% of the issued capital shares in the company at 45 pence. Okay? They still hold 19.99%. The selling shareholder will be subject to an orderly market arrangement in respect of his remaining shareholding. I mean, they can't just dump the stock pretty much. But this ends 90 days after completion of the placing. So 3 months, March, April, May. So after May, if they haven't sold the rest of the shares, 20% there, they can, I don't know what they can do, dump them. The company's not party to the placing and won't receive any proceeds from the placing. So in the last few days, last week, all these companies have been buying up Hourglass's shares. Watrium, DeHambro, Lombard Odier, Gresham House, 60% pretty much, free float 39%, okay? Hourglass still have 20%, which I assume will be selling because it's not a fund anymore. There's an NED, by the way, non-executive director from Hourglass on the board of TruFin. So obviously they're talking, they're communicating very well. But Hourglass sold 53.83%, but only 24.35% has been placed with institutions so far, and they continue to hold 19.99%. So essentially, there could be up to 44.34% of the company shares hitting the market. That's a big chunk. That's why you scale in. So there's going to be a drop opportunity here if too much gets sold. At the moment, there's hardly any stock available. It's very tight. And we may see more institutions come on board and buy more. So we don't know yet. We don't know what's going to happen. But there may be an overhang of shares coming onto the market 90 days after completion or soon. I don't know. But always, be careful when you're scaling into a company. If you've got a big seller there, it can pull the rug from under you. So just be aware of that. By the way, Watrium, they increased their hold of this company. They had 10% before the placing. Now they've got 20%. This is Watrium. They are a Norwegian family office behind the Royal Caribbean Cruise Line. They have a multi-generation view on their investments. They say a key objective of Watrium is to hand the firm and the businesses over to the next generation in an improved state, financially, operationally, and reputation-wise. So they are long-term holders. They are holders for generations. And if you just search that company and the family name, phenomenal. They are super wealthy and a big fund. Impressive investment funds there. So it's worth looking at them. They're good old money there, So I like that direct skin game, and the shares are tightly held for now. Unique. I don't think any company's got this kind of makeup of these fintech companies plus a gaming company in hot areas. So I'm going to say it is unique. Absolutely. Liquid assets. Have they got cash? Always important there. So as of the 31st of August 2020, the following assets were no less than 7.6 million of cash, 9 million loan payable by them. This is the company they spun out. They loaned them. They loaned distribution 9 million, pretty much or more. That was due to be paid. 1.6 million of assets within Stargos. 2 million of assets in Virtus Capital. TruFin has no more than 4.7 million in liabilities. But this loan was repaid. 9.4 million. And they're fully funded to retrieve the profitability. So they've got 9 million plus that 7 odd million they had, and they're pretty much not burning much cash now. There's a lot of companies, like I said, an inflection point, starting to generate cash. So this is what I'm thinking. Market cap is 55 million pretty much. Cash, 15 million. So take that away, you've got 40 million. Excluding cash, 40 million this company's worth. There's 4 companies there. Each company's worth about 10 million. That to me sounds cheap. You know, considering they are hitting now, starting to generate value, revenue, and all the investments gone into them. PlayStack is at a really exciting point. Sataga with Lloyd's at a really exciting point. Auction, EBITDA, positive. And they're worth an average 10 million each. I assume is undervalued. The only risk I see here, like I said, is the overhang, the seller, which could provide opportunity to buy some shares cheaper. But that's why I like this company. Easy to understand. Gaming, you know, fintech. It's easy to understand. Is it scalable? Yeah. It's pretty much all digital. Digital is very scalable. Good margins. So yes, it's all scalable. And that's why I like it. So do your own research as always, but I hope that was of some help to you. And that's TruFin, ticker TRU. Thanks so much for watching. Hope you liked this video. If you did, then share the club. Okay? Thanks very much.